in this video, I'm going to share with you why I think selling put options is the best way, or one of the best ways, or favorable ways to trade for a living. Right? If you want to make a consistent, and we're not talking about an occasional big win or occasional win and then you lose it back to the market. We're talking about consistent, ongoing 5 to 6%, realistically 5 to 6% monthly ROI, return on investment trades. Okay, and then literally you can make that every single month, and throughout the year we're talking anything between, depending on a bit of luck, anything between 50 to 100 or maybe even a little bit more percent return on your investment. So if you do the math there, right, I'm going to share with you why I think it's just better than, say, normal trading. Normal trading is very difficult, day trading especially. I'm not saying there's no profitable day traders out there. There probably are, but we're talking about a very, very, very small percentage of all traders, and it is a very, very difficult skill, and there's so much emotions involved. If you can't control your emotions, it's not worth it. But swing trading, put options, it just makes sense, and I think it will make sense if I explain to you guys, especially with the last 3 months, in fact last 7 months of results for me personally, but even on an alert basis, the last 3 months of results, we're talking 100% winners without any exaggeration. So let's get right into it. Right, some of the huge advantages that with put selling, selling put options, you pretty much make consistent income regardless of market conditions, even during bad market conditions. And I'm just going to share with you why. Okay, so let's have a look at Finviz, for example. Okay, let's take it to this. Let's go to Screener. Okay, right. What I typically do, I typically go to use Finviz is free, by the way. I typically go to Finviz and I look at what the most recent month, 3 month, and 6 month. You know what's a good performing industry. So I can see consumer services, communication services, and technology. I'm sorry, I got a little bit of a fever, so I might sound a little different, but right, technology seems to be very good actually. So let's go to tech. Right, so you go to Screener now, and you choose sector and you choose technology. And from there you go to your you go to your technicals, and you want to find patterns that are let's say triangle ascending, right? So these are the sort of things you want. So now you want to click on charts. Now this has just filtered out all the triangle ascending, like going up, uptrending stocks, right? So you want to find something like this, for example, which is near the bottom and just recovering, right? After a correction or crash and just recovering. AVT, I don't even know what this stock is, but let's just go to it and have a look. Right, we found that in a couple of minutes, right? So this is a stock I would trade it right now, right, with a put option. And the reason is the stock has just done a correction and it's starting to recover. That is when you want to get into trading a stock. You don't want to be getting in here by going long because it's already pumped like so many percent. You don't want to be going in long on a drop because you don't know how far it's going to drop, because look here, it drops so much. But on a recovery here, like not there, right, about that candle or even that candle, that's where you get in. But here's the thing, if you got in here, you traded stocks, you might lose, you might hit your stop loss, right? But if you traded put options, you will be in profits. And the reason I say that is because, let me just explain, right? Let's say if I was to trade a put option here, what I would do, I would sell put option at a strike price of about 41. That's what I would do, or if even safer, a strike price of 40, which is even safer, right? And I'll go about anything between 1 to 3 weeks into expiration, right? And the reason I do that is swing trading. I don't like day trading. It's just too much screen time, emotions, all that. If you swing trade, literally, it takes me about 2 hours a week to trade, to do all my options trading, and on average I make conservatively and realistic 5 to 6% return on investment every single month, and I've been doing that for the last 6 to 7 months on a personal basis, and I think this can sustain. And arguably the last few months has been the worst market conditions, and you can still profit with it, right? Now, what is a strike price, right? For those of you who are perhaps pretty new to put selling options, right? Let's say I pick a strike price of $40, right? What that means is if the stock, as long as let's say I go 2 weeks in advance, right? Let's just say expiration date of Friday the 15th, okay? Typically, with put selling options, what you do, you collect premium as soon as you open the trade. So as soon as I open the trade, depending on what the premium is, I am going to collect that premium for contracts. So every contract I sell, I'm going to get like whatever, like 200 100. Usually, right, typically, depending on the stock, a stock like this, I would typically expect every contract to be worth anything between 40 up to a couple of $100, right? So if you do 2 or 3 contracts, you're going to make a decent amount of income just like that. And what that means is, as long as the stock price by expiration date, which is the 15th, as long as by the 15th the stock price stays above $40, you are going to keep all that premium, so you're in profit basically, right? So this is why I think put selling options is the best, because it doesn't matter if you make money if the price of the stock rises. You make money if the price just stays stagnant like that, or you even make money if it drops some. Only if it crashes bad, like to there, below your strike price, do you then start to lose money. Now, here's the thing. If you start to lose money with put selling options, right, the strategies that I use, I will delta neutral hedge it, right? So you work out the delta, which you can work it out from your broker, right? So I personally use Interactive Brokers. There's a few that you can use. There's Interactive Brokers, that's very good. There's TD Ameritrade, that's very good, and there's Tastyworks, which is good as well. There's a few there, but I personally use Interactive Brokers because I've been using them for like the last 3 to 4 years, and I like them. I'm used to them. They're professional. They've got cheap commission, cheap fees, so I like it. So if I'm being honest, the chance of this stock, right, that's just on a correction, that's starting to recover, to drop that much more, it's quite, like, low, if I'm being honest. So, for example, if you just look at, as long as it's a good stock, right, I don't really typically know this stock, but if you do the research, right, if you do some fundamental analysis, again using Finviz, if you go to the fundamentals, right, and the screeners and fundamentals, look at the fundamentals, what the analyst rating is for that particular stock. Is it high? Do they think is a good stock, right? And also check the EBITDA of the company, check the financial security standpoint of the company. If you've done all that analysis and you think that stock is a good stock and is safe, then pretty good stock to go for, right? So you don't go on the drop, you go somewhere here. Let's say you got in there 1 or 2 weeks, right? That's a win, right? Let's say you got in here 1 or 2 weeks later, that's a win because it didn't drop below the strike price you would have picked, right? So if you even just do like a little thing, I don't even know this stock, right? But it's just to test the scenario here, right? Let's say you went in here, that's a winner, right? I wouldn't go in there, but let's say you went in here, right? If you traded stock, it's arguably loser or winner, I don't know, but if you traded strike price options at 35 or 34.50, that's a winner, right? If you went in even here, even if you went in here and you choose a strike price of just below here, 37, whatever that is, that's still a winner. So I probably typically wouldn't have gone in there because it's not enough of a drop. I typically find stocks that's dropped more. So anyway, just, before we finish the video off, right, there's just so many advantages trading put options. So I give alerts anyway in my group, which is achieved at a 100% win rate since the 1st of January that I started. So typically, that's how I find my stock, that's how I trade, and as long as the stock price remains above the strike price that you choose, you're gonna win the trade. It's just, in my opinion, it's just much more predictable when you go for a stock that is a good stock, that's just done a correction or crash, that's just starting to recover, and you go in on a put option. I just think it's much more predictable than guessing which way a stock's going to go on a daily basis. And there's not much emotions involved because there just really isn't, just the nature of the swing trading. And also there's not much time involved. Like I said, it takes me 2 hours a week, maybe even a little bit less, just to pick my stock, to take my trade and to make that profit. Because of the nature of swing trading, it's just lack of stress, lack of emotion, a lack of, you don't even need much time. It's a lot of freedom in it. So if you just take a look at some of the past, right? So DocuSign, that was the first one, 46 strike price. I'm just going to show you quickly, 13th of January expiry, right? Docu 40, so 13th of January. So let's have a look at what happened with Docu. And these are, if I'm being honest, this group isn't typical group that, we play up the winners and we hide all the losers and we make so much fire and shit like that, and rockets when we win, and then all the losers is like we forget about it, right? Literally, and everything's timed, right? You come over here, nothing's changed, everything's absolutely timed live, and there's no cheating going on. You look at it, you follow these alerts, you would know, those of you who have been following the alerts, you would know that these are real alerts. These are not lies. These are totally put up live. Literally, as soon as I take the trade, I put the alert up, and if it's a winner, it's a winner. If it's a loser, it's a loser. And so far with options trading alerts, it's 100% win rate, right? So if you look at Docu as an example, which was about 13th of January, right? That said, so right about there's when I went in, saw a bit of recovery, and I chose a strike price there, right? And within that time, that's a winner. So that's the first winner, and then we're not going to check them all, but let's say MU $34 strike 27th, right? So MU $34 strike price right here. So that's way above our strike price. Strike price is literally like below here somewhere, right? Or MU 34, yeah. So $52. Yeah, I thought it would be. Why would I choose that? Yeah, so it's literally about here, 52, right below that support, and we went in about the 27th or whatever here, right? We went in about here when I saw the recovery, and it stayed again above 52. So because I'm looking at this sort of support and resistance here, and you're trying to pick something which is safe with a good premium. Right, so that's a winner. If you actually just look at it, you look at yourself, right? I don't want to make this video long, but once you join the group, you can back test all of it yourself. Or what you can even do is just from here, you just follow the alerts and just follow it through a demo account, and you'll see how accurate they are. Win rate is literally 100%, right? Now here's the thing: if you are looking for day trade alerts, like 5-6 trades a day, this is not for you, right? This isn't for you. But if you're looking for consistent profits of returns of about 5 to 6% a month, then these alerts are absolutely for you, because that's what's been happening with 100% win rate, right? I think in trading, it isn't about how much you trade, how much you're glued to the screen, right? Even if you're taking, let's say in a month, like even if you're taking 50 trade in a month, there's no point if you're losing 35 or 40 of them and only winning 10 or 15 or 20, right? If overall you're still losing and you're spending so much time and so much stress and so much emotions, there's no point, right? Whereas what you can be doing is literally spend half an hour, 1 hour a week, taking one trade a week and 3 to 4 or 5 trades a month, and you make 5 to 6% return, because every single trade makes on average between 1 to 3% return on investment with put selling of your account size. And if you take 3 to 4 or 5, that's, it could be, just realistically, it's actually anything between 5 to 8%, or maybe even sometimes 10% if you're lucky with the premium. But I don't want to overpromise. I want to underpromise and overdeliver. So if I'm being honest, let's just aim for 5 to 6%, very realistic return on profit month on month, regardless of market conditions, and this is doable. Of course, if you want the huge profits, again, you should join. I think come over and join the Freedom Income Discord group, because I think next year we're going to make huge profits, return on investment with the crypto side of things, because next year is a great year to get into cryptos if you were ever thinking about getting into cryptos. Because next year, if anything, is the time that you want to risk it. Anyhow, next year, what I mean is 2024, and there's a reason for it. Anyway, come over. I'll include the link to the Discord group. Join and try the results for yourself. You won't regret it. Thank you. Happy trading.